So the budget is gone and we can look at it now in the rearview mirror and begin to see the story around it, which appears to be mostly about satisfying the demands of the financial markets, the bond market, to keep interest rates down. And we can see that the tax rises, which were necessary to do that, they've been pushed towards the end of the Parliament, 2029. And that, of course, is when the general election comes up and the government isn't going to want to implement tax rises at that point. So the government must be hoping, I suppose, that by then the economy will have grown sufficiently that the tax rises won't be necessary. Otherwise, the general election is going to look pretty bleak. So anyway, the bond market appears to have taken it on the chin, pretty happy about the fact that the government was willing to raise taxes. And in the wake of that came another sort of vote of support from financial businesses because two big American investment banks, JPMorgan and Goldman Sachs, they both made announcements concerning fairly big investments in the UK economy. JPMorgan in particular, proposing to build a massive tower block in London. They're going to spend £3 billion on a new headquarters, and they say that'll generate £10 billion of activity in the UK economy. So that set me thinking, well, what do we make of that? Is that a good news story for the economy, or is that not necessarily such good news? Because after all, what do banks do? Well, banks basically manage money. That's all they do. They don't make anything. They don't actually create anything. They don't add any new wealth to the economy. All they do is they manage money. And in that process of managing money, they try to extract as much of it as they possibly can in order to give it to their shareholders. And these banks, they make monstrous profits. They make billions and billions and billions in profits. So a £3 billion building isn't really such a big deal. And you can be sure that that £3 billion building will pay them a handsome return over the medium to long term. Because that's the nature of investment. The more you put in, the more you take out. So these big investments, they're really a big statement about the amount of money that these banks hope to extract from the UK economy over the next 10, 20, 30 years or whatever it is. And that's not necessarily good news from a British point of view. So it's a question really whether we should embrace and welcome these sorts of investments or whether we should be much more wary of them than we are at the minute. Because what we need to do as an economy is make sure that the money in the economy is going to where it can be most productive, where it can produce the most real, actual wealth, the stuff that improves the quality of people's lives. And what it's doing when these big banks get involved, it's not doing that at all. It's going to where it can generate the biggest return. It's going to whatever will allow those banks to extract as much of it as possible. Just think of the banks as being symbolic of everything that sits between the producer here and the consumer here. And the producer is making real stuff that the consumer wants, and the consumer is paying for it. And somewhere in the middle is this vast, great collection of organizations and people and banks and all sorts of other things who are transacting that process between the producer and the consumer and extracting wealth out of that process, extracting money, which means that the producer receives less and the consumer pays more. Now, okay, so something is needed. I'm not saying nothing is needed in the interface between producer and consumer, but we shouldn't celebrate the fact that this thing in the middle, this interface, gets as big as possible. So these investments being as big as possible is actually a warning bell that more and more and more of our effort and activity in the UK economy, fueled by this foreign money pouring in, is going to the process of extraction. It's getting in the way of this interface between producer and consumer. It's all about trying to take more money out of the economy and give it to the shareholders of these foreign investors. So not necessarily such a good news story. It's certainly a symbol of the way the UK economy is currently functioning. And we've seen that time and time again with these images where we have the water industry, which is now all about extracting money in the English economy. This is all about chief executive pay, the enormous increase in chief executive pay over the last few decades. And then here, this is about the huge amounts of money extracted from the economy through financial trading. And here we have the bank profits themselves and the amount of money that could be used for various useful activities that the government is short of money for. And then over here, we've got the activities in which the banks are investing, which are mostly financial activities and property activities. and very little going into the productive economy there, the green section. So we've been over this time and time again, but it is really interesting to see how this plays out in real life, as I say. And this good news story that this vast American bank is going to spend £3 billion building another tower in the City of London turns out to be not necessarily such good news at all. Because one thing we can be absolutely certain of is that more money will leave the UK economy as a consequence of this investment than will ever be put in, because that's the nature of foreign investment. That's how investment works.